another episode of Bullish Chips, where we talk about chips and only chips, more specifically the Direxion Triple Leverage Semiconductor Bull ETF, which goes by the ticker symbol SOXL. We wanted to remind you that this channel does not offer financial advice. We are not financial advisors. What we do offer is our view of the price action for SOXL, both in the current day, in the past, and what we see for the future in the price action for SOXL. So my name is Chris. I just wanted to bring you a short video today because we received an email asking us to go more in depth in what we call our 4-hour markers and how we use them in our day trading strategy. So when we talk about our 4-hour markers, there are seven specific markers that we have. The overnight high, the overnight low, the previous day's high, the previous day's low, the high of the second 4-hour candle of the previous day, and the low of the second 4-hour candle of the previous day. The last marker that we pay attention to is the opening print, or the opening price for the current day. So what we'll do here is we'll take, and this can apply to any chart, right? It's not just for SOXL. This is for day trading any ticker symbol. SOXL is what this channel is focused on, but we do invest in other stocks. So we do, and we trade other stocks, I should say. So we do use the same method for our other stocks that we do trade. Let's go ahead and go down to the 4-hour time frame, and we'll lay out our 4-hour markers, right? So the first marker that we're going to lay out is the previous day's high. Now, because we're going to need, I'm going to show you how price action worked for these particular levels. I'm going to use the Thursday's candles to make the markers so that you can see how Friday's action reacted off of those markers. So we'll have our previous high a day, which will make an orange solid line, and we'll just put previous high a day as the title there. Same goes for previous low a day. Make it a solid line, make that orange. Title it previous low a day. And I accidentally made this one yellow, so let's go in here and make it orange. And I color code them in specific colors so that when I am on more micro time frame charts, I can see or I can tell what these lines mean without actually having to look at the label for the line or zoom out and waste time trying to recalibrate myself. I'm already calibrated even when I'm on the tiny time frames. So for the high of the previous day's 4-hour, the second 4-hour, I just title it up, but I give it this gray dashed line so that I know that that's the high of the second 4-hour of the previous day. And then we'll do the same for the low. We'll call this down, and you'll see why we'll call it down in a minute here, because this all plays into our notes that we create the night before, so we have a quick reference as to triggers, target points, extended target points, and things of that nature. So you can see we've got the previous high a day, we've got the high of the second 4-hour candle, we've got the low of the second 4-hour candle, and we've got previous low a day. So the last, or not the last two, but two more that we need to map out are the overnight lows and overnight highs. So for that, we'll go to 5-minute and get our extended hours showing. And I think her swim is jumping on me. So this was Friday's session, right? So we want to go to, here's Thursday's session. We want to get the high and the low of the overnights I'm sorry, the overnight for this session. So this gray session between Wednesday and Thursday, right? Because we're for this example, this is, we'll say this is Thursday night that we're making these notes, right? We can't see to the right of it, so this is just Thursday night. So we want Wednesdays. I'm sorry, that's not true. Confused myself because we're acting like this is Thursday night. We want Thursday nights overnight high and overnight low, and these levels may need to be adjusted Friday morning when you come in. Friday morning, so you can see early on in the session, overnight session, it was a pretty tight range. It made a high and it made a low, but then this is when Trump announced 35% tariffs on Canada. You can see how it went to make a lower low, but sometimes it will just kind of drift through the night and then be down here by the time you wake up in the morning, and you've got to move your level. So let's mark the overnight low. Actually, so that was not the low, this was the overnight low. Okay, and we'll label it this bright blue color, and I just use a capital L, real simple. And then we can see the high, overnight high is right here, and we will make it the same blue color, dashed line, and we'll just label it with an H. Okay, so we've got overnight high, overnight low. Actually, let's go back, take the extended hours off. So we've got Thursday's overnight high, Thursday's high, Thursday's low, the overnight high Thursday night, the overnight low Thursday night, the low of the second 4-hour candle from Thursday, and the high of the second 4-hour candle for Thursday. So what we want to look at is how price action on Friday reacted to it. So the last 4-hour marker that we use is the opening print. So we can't mark that till the day opens, but you want to kind of be there when the market opens, if possible. I know that's not what everybody can do, but you want to go ahead and mark off the opening print, right? So I just give a price level and I just leave it that, because it makes it real quick in the morning. I just go double click where it opens, and then I can get back to assessing and determining what's going on and where entries might be. So let's look at how all this action played. And if you actually watch our stream our video from last night, we do talk about the trades that we got into and where we exited and how we use these markers. So you can go ahead and check out that video as well if you want more detail about that. Right now I'm just going to talk about how the price reacts, right? So we can see the price opened here and it pushed down to the opening print and overnight low. Previous day's low and overnight low are essentially the same level, right? The same price. So it pushed down to overnight low and previous low a day and actually wicked through it, but it came back up and look where it closed. It closed exactly on overnight low. It wick down one more time to show price is not being accepted down here. It did wick up as well and didn't get accepted there, but it still closed above the overnight low, which is a positive thing. Now it's negative, or I don't want to call it negative, but you wouldn't want to just immediately jump into like a call right here just because we closed the second candle green above the overnight low. We were going to go back up to overnight high. No, because we're below the overnight low, price is still technically bearish for the day. Yes, you closed a green candle. Yes, you closed a second candle above overnight low, but it's still below opening print. So it's not like you want to use this as a trigger to jump into any calls. It's a good trigger to trigger your mind to see, okay, we may be headed back up. Let's look for an actual triggerable action up here before we get in above the opening print. So you see we got support on overnight low, previous low a day. We pushed up twice to opening print and rejected, but then we pushed through it. Now, some people will jump into calls as soon as we push through opening print. You know, you can get in a little bit early, but you do run the risk of candles like this where you push back down, and in some cases you push all the way back down, because this is, you know, what's considered somewhat thin structure. If we go look on the 1 minute at the beginning of the day and we see the push up, it's not too thin a structure. Thin structure is where we just, you know, have a bunch of green candles. So we did have a little bit of what's called corrective activity or price action at the opening print before it pushed up, but you can see it came back down and found support on opening print. So you could have used this as not necessarily a trigger to get in calls, but again, trigger your mind to, okay, if we get a trigger above this opening print, let's go ahead and get calls, right? Unfortunately, you know, it made lower highs and it broke through. It was basically a fight over the opening print for the first, what's this, almost hour of the day, right? So if you're a scalper, if you're real quick, you could have taken this second test because you got a higher low here. You know, got the higher low. You could have jumped in calls right here. First target point off of overnight low is normally opening print. Doesn't give you a lot of magnitude, so you know, if you had a bunch of contracts and you're just real quick with it, you can have maybe have profited there. Otherwise, you hold. Even though we reject off of this opening print, we can see if we get another higher low, which we do, and look at that. It pushes on through, comes through. You know, once you push through, you can set a stop at the opening print, or you can just follow your lower low, higher high rules and keep your stop set down here. If you get stopped out, not really anything lost, especially if you were jumping in really quickly down right here where it made the two up. You know, you lose a little bit, but if you have your stop set below, you know, just slightly below this lower low, then this whole fight over opening print, you don't get stopped out, and then you get to benefit from that second push up that you get. And look at where we pushed up to, the low of the second 4-hour candle of the day. Now I do have this 200-day moving average, which is the blue line, and the 50-day moving average, which you can see it obviously used to, you know, reject off of early on, but what that helps do is bring confluence to levels, right? So you wouldn't want to use this as an exit level just because it's hitting this all by itself. You would want to see some type of other horizontal level correlating with this particular point where the 50-day moving average comes down, but it didn't. So this is why you didn't get a lower low here. It wasn't enough, right? Now you get the confluence of this low of yesterday, the second 4-hour of yesterday, and this 200-day moving average. Now you've got more of a rejection point, and you can see that's where it started to stall out again. Here it just rejected once, pretty much came back through after it interacted with it a second time. This one it rejected off of, and then it had much more of a adverse or a downside reaction, and it did actually make a lower low, not only on the 1 minute, but I believe on the 5 minute as well. If we can get Thinkorswim to focus here. No, maybe it didn't. No, yes it did. So even on the 5 minute, you see we got the higher high, but it came down and made a lower low, right? So okay, we don't, not to get too hung up on that, but you can see how it the whole time this 50-day, once we get to this 5 minute, now it's the 50-day moving average, which was the 200-day moving average. It plays with this 4 hour, and you can see how it makes price action play here too. And you know, the second target point after opening print, if you're getting off of a bounce off of overnight low, or your first target if you're getting in off of the bounce off of opening print, first target is going to be your overnight high or previous high day, whichever one comes first, right? Sometimes the overnight high can be above previous high day, so previous high day would be your first target, but your first day trade target would be overnight high in this case, because it comes before previous high day, and that's exactly where price ended up coming up to, and that was the highest prices of the day, right? Should the day have gone on a little longer, maybe we would have found support again here and pushed up to the previous high day, but that's we didn't have more time, so we'll see on Monday what happens. But you can see how these levels play out, right? And so from a day trading or scalping perspective, it's very helpful to know where these levels are at, because it helps you formulate, or not formulate, but kind of solidify whether you've made a good choice in the contracts you've bought, or whether you need to get out of them. And it also gives you, again, if you're below opening print, you're not really looking to buy calls, right? If this rejected off of opening print, then it probably would have fallen through the overnight low, and then we would have went and tested other horizontal levels that we have on our more micro time frame charts. But you can see how this plays out, and I'll just go through and pick a random day just to show that it doesn't, you guys know I come with one cut videos, no editing. I don't do any prep work other than I saw this email and said, oh yeah, this will be easy to show because I already have it on all my charts, and everything that I want to talk about is already out there, so it's set up, so I don't need to go set anything up or come up with any plans or anything like that. But let's just go on a 4 hour. We can't go too far back because we need to look at the micro time frames, and they only go back, let's see, 5 days on the 1 minute, 30 days for pretty much everything else. So we can look at 30 days back. So we'll go to, we won't use the gap and go because obviously that doesn't do anything for us, but let's show one, to the downside. Right, so this is, what day is this? What day is this? Friday. So this is 1, 2, 3, 4, 5. That's 1 week. 1, 2, 3, 4, 5. 2 weeks. 1, 2, 3, 4. 3 weeks. 1, 2, 3, 4, 5. 4 weeks. So 4 Mondays ago. That would be in June. We'll mark it up. So let's previous high a day. We'll give it our orange solid line. Previous low a day. Actually, yeah. Oh no, that's not going to give us. We want the day before it. My apologies. Activate. We want the previous low a day on this candle. I'm going to show downward price action. Edit. So this is previous low a day. Mark it with the orange, and if you're going to use this type of strategy method, the colors don't matter. It's whatever you want to choose. This is just what I choose. That is our down trigger on the 4 hour. So we make that gray. This is the up trigger for the 4 hour. We'll make that gray. Yep. So that looks good. And then we can, let's just go to like the 15. So opening print was up here. There, we don't change that. So now let's get our extended hours going. Come on now, focus. Oops, that took us back too far. There we go. So we want the previous days high and overnight high and overnight low, right? So make it a little easier to see. There was the overnight high. So that's, we just mark it with an H, make it blue. And this was the overnight low. Blue. Alright, so we'll turn the extended hours off. We'll stay on the 15 minutes. And let's go to the day after those markers were set. And let's check it out, because I know it works every time. So there we go. So let's just look at price action, and it's, oops, why do we have activate? We need the opening print on this day, because this is the day we're talking about. Okay, so you can see the previous high a day, previous low a day, the 4-hour down trigger, 4-hour up trigger, and we marked opening print, overnight high, overnight low. Okay, so let's just take a look at the price action. It opened, immediately went above opening print, immediately went above the 4-hour trigger up. So that plays into our notes, right? So what day is this? Does it say? Edit. What day? 6/27. Let's see if we have those notes. June. That was a Friday. Yeah. So let's just look at these. Get that out of the way so we can see. So we can see the 4-hour trigger to the upside was 25.25, and we can see that's what the price was, 25.25, right? So this plays into our notes. So the night before, we came in and we knew that if price action went below 24.98 at the beginning of the day, that would trigger a 2 up, green 1, 2 down. So it's a reversal pattern. And these reversal patterns and numbers 2, 1, and 3 that I'm referring to goes back to the strat. If you look in the description of this video, Rob Smith, rest in peace, came up with a system, very simple system to identify price action, where a candle can only be a 1, a 2, or a 3. And it's probably the easiest way to read a chart. It's essentially, I think kids should probably be taught how to read them this way before they're taught how to read a chart any other way. And so what that does is give us a trigger, right? If it crosses below the low of the second 4-hour of the day, which was 24.98, that's our trigger, right? So 24.98 is here. If we pull up the 4-hour chart, you can see that's the low of this candle. So the second 4-hour of the day, that's the low. If it triggers below that, then we know we've got a strat to the downside. If it triggers above the high, then we've triggered a strat to the upside. Let's get back to the 15 minutes, so we're on a more granular chart. There we go. That should be big enough for everybody to see. So we opened up and went above the 4-hour trigger. So the magnitude of the 212, let's do the downside. The magnitude of the 212 up with the trigger of 25.25, the magnitude was only 25.36, and it went to it, right? So that would mean that our trigger would be here and our target would be here. Our first target would be here. The second target would be the overnight high, 2567. Now we didn't have that when we wrote our notes, because we do our notes the night before. The overnight high occurred in the morning. I could have updated my notes, but my first target was 2581, second 2602, 2658. I won't go to my micro charts right now because some people might find them a little bit messy, but I have broadening formations out there, and one or two Fibonacci retracements or extensions, and which give me my extended target points once you get out of the highs of days and overnight highs and things of that nature. But for your initial target points, once you trigger your 4-hour trigger to the upside, the first target is your magnitude, which in this case was pretty simple to get to. Your second target is overnight high, and then you have your extended targets. And you can see price action went to overnight high, did a little corrective activity, and then reversed back down. And what did it do when it found previous high a day? It had a little bit of corrective activity. What that does is it lets you line up, look at it and say, okay, so we're still above opening print, but if we're getting a higher low on this 15-minute time frame, maybe I want to take my chances. Risk to reward would be, you would enter on the so in order to make this a lower high, you would have to have a candle go below the low of this candle. So your trigger would be the low of this candle. If you wanted to enter right here with the target point of previous low a day, maybe, or overnight low, you could do that. Overnight low would probably be a better target because it's a stretch. You're above the opening print, so which is more of a bullish thing. Now, there's other things that we look into, like the internals. So you want to look at the breadth and the volume and of inflows versus outflows, and what things are doing like that. We do have charts. I'll refer to those in a second. But let's say if the breadth was went red and volume outflows started, there was an increase in volume outflows and the tick was below the zero line, you may try your hand at buying puts and targeting overnight low and previous low a day as your targets. So you can see you get the lower high underneath your overnight high. You would enter there. We made it to opening print, had a little bit of corrective activity, actually did wick down to overnight low. So because your entry is here, your risk is up here, so you've got to get 2 to 1, right? So this is 25.44, 25.84, so 40 cents. So 40 cents from 25.44 would be 25.04, which is 25.05. So that's a 1-to-1 risk to reward ratio. If you wanted to cut some there because you're treating it just as a scalp, hey, you can do it. I'm not in the business of doing 1-to-1 risk to reward ratio trades, but if that is your thing and you have a high winning percentage, go for it, right? This is a way that you can get that high winning percentage. Me personally, I would buy something probably 2 weeks to 3 weeks out, if not the next monthly expiration. That way it gives you a little bit of breathing room to bounce off of the overnight low, come back up and test the opening print and see, do we accept back above it? If we accept back above it, once we've broken to here excuse me, below this low, we're now creating a lower low. So you would move your stop down to here, and then you're still targeting overnight low. If you have 0 days or weeklies, you could sell here, get your profit. If you got 10, 20 contracts, it's not too bad a profit. If you got something 2 weeks out, 3 weeks out, a month out, you can let it breathe a little bit and see if we get acceptance back above opening print. Here it closed above it, but that's not really enough. That's not acceptance, especially with a wick that big, wicking off a specific horizontal level, being opening I'm not opening print, but previous high a day. It's a very specific level to reject off of, and price actually started to accept back down here. So if you've got 2 weeks out, 3 weeks out, you're still in and you're making more profit. Now we've made it here. The next target is what? Previous low a day. And what did we go down to? Previous low a day. Yes, we broke below it a little bit, but you could have had, sell, your cells set up to sell as soon as we get to opening print. And what does that give us, right? So that's 25.44 to 24.59. That's almost $1 move, right? So if you got 10, 20 contracts, dollar move with SOXL and the delta that it has, and having, your delta is just going to increase as this goes down, and it's going down pretty rapidly. So the delta increases pretty rapidly. You get those big increase days. You get those 100, 200, 300% contracts, depending on what your strike is, and that's good money for a day, right? So that's showing action on a very trending day. The same would apply here for a sideways day. That would have been your opening print. You see how it respected that. Was probably an overnight high up here. You can see how it respected the previous day's high. It bounced off of that, and then it just bounced in between opening print and they're probably like overnight low was around here. But these levels are just respected on a day trade scalp perspective so well that this channel is about SOXL, so I won't go do it on another chart. I'll leave that up to you. Again, you should be doing your own research anyways. But that's this method will work on any chart, right? It's just from experience, this method will work on any chart. So I'm going to remove these and just touch really quickly on the internals. So I'll go to the current day, the last few days, because that's where the internals will be showing. And we can use these to help us, help guide us in whether we should be entering in a certain direction at a certain time of the day, right? So we'll just look at this past Friday's session, and we'll look at the we'll look at the internals. So here are the internals, and you can see I've got TQQ up here, which is triple leverage for QQQ, just because the internals that I use are going to be QQQ internals. It wouldn't make much sense to use like S&P 500 internals or IWM internals, because SOXL is basically just all companies that are in QQQ. So this would probably work more precisely if you're trading QQQ or TQQ or some QQQ other offshoot, but this, because of SOXL's just basically all QQQ, a bunch of the QQQ tickers that are the bigger holdings in QQQ, I should say, it does work for SOXL as well. Not exact, but it gives you another tool in your toolkit to use along with your horizontal levels to know whether you should be entering. So we're just looking at the internals. So the tick Q, vol QD, and ADQD. Now, if you're not familiar with internals, these are all based off of SPY internals or S&P 500 internals. So for like S&P 500, it's just tick and ADD and vol D. But for the Qs, that you're basically adding a Q at some point in the name. So like the tick. So the tick is the number of upticks versus the number of downticks on the New York Stock Exchange. So the tick Q is just the number of upticks versus downticks in the QQQs. So a lot of times you'll see when the tick is moving up, price is moving up, right? Price is moving up. Now, one thing you want to pay attention to are these minus 800 and minus $1,000 levels. Those signify like trend higher and trend lower zones. and the same. It basically gives you a strength level, right? So let me take a look. Give me a second here. Sorry about that. I had to put my dog out. So if you just look at the strength, it's when in trend lower zone. That's where we opened. Is basically trending lower, right? But then we had the push to the upside, push back down, push back up. You see the push back down, push back up, and then when the zero line is just neutral, so we don't really have a trend. So you can see also how it's reacting off of there as well. And when it pushes down off of it, you're gonna have more bullet or bearish action, which you got there. And then when it pushes above it, you're gonna have more bullish action. So the same goes for the vol QD. The vol QD is the volume difference. Basically, it measures breadth as well, and it's the difference of amount of stocks that go up in price and the amount of stocks that go down in price in the QQQ, right? So it's a slower mover. It's not like the tick. The tick is going to be it's counting literally every tick. This is counting is watching the volume, so it's a slower mover, and you can see it's just on the zero line basically all day Friday, and which is why like Friday pretty much went sideways. Yeah, you had your early morning action that you could see in the tick, but after that early morning, 10 o'clock, we went sideways the rest of the day, which is evident by how we were just kind of playing with the zero line here. We were playing with the zero line here. Now the one difference is the ADQD was in trend lower zone basically all day. And ADQD is just advancers versus decliners. It's the difference in the number of stocks advancing versus the stocks declining in the QQQ. So it's another breadth indicator. That is what held the QQQ from just taking off on Friday. We got the push up, but the decliners were greater than the advancers. So same with money, it was kind of flowing out, and by the end of the day, it was flowing out at a greater pace. Now it was nowhere near the trend lower zone on volume, but the time spent in the ADQD in the trend lower zone, you would kind of keep you from just jumping into a bunch of swinging longs over the weekend, unless you've got further out dated contracts, nothing expiring next week. This would not inspire any type of reason to want to hold calls over the weekend. Not saying that we're going to open up down on Monday, but it doesn't show any reason to hold calls over the weekend. So when you use the internals along with the horizontal level that we draw, I'll bring you out to the ones. Oh no, we removed them. So, but if you combine the two, it gives you a really good guide for how to make day trades and scalps throughout the day. So, I just wanted to make this little video for you guys. It ended up being longer than I wanted it to be, but it is what it is, and I hope I gave a good amount of information. So, especially for the individual that emailed me, you know who you are. I hope this helps you out, and then I hope it helps out anybody else that may come across it as well. So, if you liked it, do all the YouTube stuff, like, comment, subscribe. Leave a comment to let me know if you did like it, if you didn't like it, if you don't agree with something, if you want to challenge it, let me know. I'm always up for constructive criticism and just dialogue, talking about charts and trading. It's something that I'm interested in. So once again, like the episode if you liked it. Leave a comment, and enjoy the rest of your weekend. If you're watching this on Saturday, if you come across it on a weekday or something like that, then I hope you come across it in an evening that will help you prepare for the night before. But yeah, this is what I wanted to give you guys, and have a good day.